I will read each topic in a concise, listener-friendly script. Each topic is summarized in 3 to 4 lines and preserves the original details and numbers. Topic 1. AI and Tech. NVIDIA has lined up a financing pipeline of up to $500 billion for AI infrastructure, with 6 asset managers, BlackRock, Blackstone, Apollo, KKR, Brookfield, Goldman Sachs, and retains an option to backstop up to $125 billion. The plan rests on the assumption that GPUs, especially NVIDIA's, will behave like long-lived infrastructure assets, with CUDA updates extending chip productivity. Key risks: rapid depreciation of cutting-edge GPUs, especially if Chinese providers flood the market, could collapse collateral values and force lenders to demand high bond-like yields. Analysts warn of required returns in the mid-teens. Market and infrastructure moves. CME plans compute futures tied to H100 and Blackwell rental rates, targeting an October launch, so compute becomes a tradable asset. Anthropic signed a 20-year, 191-megawatt lease with Riot Platforms, estimated $9.1 revenue, up to 16 1Bs with extensions, reflecting miners shifting into power data center leasing as AI demand revalues grid capacity. Google DeepMind reorganized. Koray Kavuktuoglu promoted to lead DeepMind reporting to Sundar Pichai. Demis Hassabis moved to chairman. With a clear pivot toward frontier LLM performance, productization and coding improvements. Google will deeply integrate Gemini Intelligence as an on-device agent in Pixel 11 to automate tasks, and Apple plans to incorporate Gemini into Siri, while Target hired Chandu Nair as Chief AI Officer, signaling large retailers and firms moving from R&D to production AI for inventory, decisioning, and customer experience. Topic 2. Markets and the economy. July CPI rose 0.1% month-over-month and 3.4% year-over-year, June 3.5%. Core CPI, ex-food and energy, was plus 0.2% monthly and 2.5% annually, a gradual cooling but still above the Fed's 2% goal, with shelter accounting for roughly 2/3 of recent inflation and remaining sticky. Wages have slowed to the low to mid 3% range, leaving real purchasing pressure for households. Energy is uneven, yearly 14.7%, but gasoline down 2.9% month. Market reaction: Treasury yields eased, 10-year near 4.65%, 2-year near 4.18%, and equity futures rose as markets scaled back the odds of a September Fed hike, not ruled out, while mortgage rates edged slightly down, 30-year fixed about 6.77%. Mortgage applications showed tentative weekly recovery, but remain far below year-ago levels. The policy path now hinges on August job and price data. Topic 3. Energy, supply chains and geopolitics. Fighting in key sea lanes has raised supply chain and energy risks. A Houthi attack in the Red Sea, Bab el-Mandeb, left 6 seafarers dead, and a missile strike in the Gulf of Oman, Oman Sea, disabled a vessel's steering and propulsion, heightening tensions around Bab el-Mandeb and Hormuz. Markets swung. Brent and WTI traded around the high 80s and low 80s per barrel, with volatility as shipping and insurance risks linger and route reopening negotiations proceed slowly. IEA cut its 2026 oil demand forecast by about 1.6 million barrels per day and revised current year supply down by roughly 4.3 million barrels. While inventories are tight, US crude below 300 million barrels, and observed global stocks under about 790 million barrels, raising upside price bias if routes remain disrupted. Currency effects include the yen near 160 despite intervention, reviving carry flows and capital shifts. Topic 4. Corporate deals and market activity. General Motors set up a program to secure up to $4.5 billion of parts via Procura Auto Parts with bank financing. JP Morgan Chase, Banco Santander, and issued IPUs to preserve cash and inventory through 2029, recognizing a way to shore up supply chains while treating pre-purchases as assets and IPUs as unsecured debt. Goldman Sachs agreed to buy Neos Investments for up to about $2.25 billion. Neos manages roughly $30 billion and runs options-based income ETFs, closing expected in Q1 22.